Hello. Hello.
Yes, good afternoon.
How are you?
I'm fine, and how are you?
Very good. Very good.
Right.
Oh, you get better now?
Yeah, I'm feeling much better. I'm feeling much better, but I'll fully recover, believe by tomorrow.
Oh, okay.
But
Hopefully.
I'm much better today than
Okay.
I was some few days ago.
Oh, okay.
Yeah.
Mhm.
Okay. How have you been yourself?
Oh, not bad, but very busy because I had to drive my some member of my family, some
Okay.
members of my family to the States
Okay.
just to fly there because it's about 4 hours from here.
It's
But
about
when
2
I
hours
get
from there.
from Montreal,
Oh, it's 2 hours.
yeah. But when I get back, it was very tough. And Friday and I went Friday, but I get back in the afternoon. It was very tough because a lot of traffic. I spent all day in traffic
Oh,
Saturday.
okay.
And yeah, so it was it was not a good experience, but I'm okay.
No, okay.
Yeah.
I wonder because I was expecting to hear from you on Friday, but
Yeah, I couldn't because Friday I spent all day, so I would then,
no, okay.
yeah.
All right. Okay. And let's get started and let's continue from
Okay.
where we left off. Yeah, so this lesson may not be excessively long.
Okay.
Just want us to look at just some few things, just finalize on some of the things that we couldn't finalize on when we started looking at supply and demand. And I believe you were able to see how we can work with market structure and supply and demand to find areas of reversals in the market where we may likely catch a trade in the market. So the first thing that we should always put at the back of our mind is market structure. So like it is always, we begin with market structure. And what we want to see is the market should be, at least the trend should be a confirmed trend.
Yeah.
The trend should be a confirmed trend. And once we have a confirmed trend, then the next thing that we want to see is we want to see the market pull back. All right. So after the market gives us a confirmed trend, then we want to see the market pull back. So in that pullback, this is where we'll be expecting to look for our entries. Be expecting to look for our entries, be expecting to look for either continuation, or be expecting to look for a reversal. Yeah, so those will be areas of our interest. And of course, we need to check the market and find them in well-priced areas, meaning that zones that are not properly priced are not zones that we are going to consider taking trades from. All right, so once we see, let's assume that this is a confirmed trend already. All right, so we are coming from down, we're going up, and the trend is already confirmed, and we just had a break of structure right here to the upside. Well, let's say it's a 4-hour time frame, or it's a break of structure. Now, once we have this break of structure right here, the next thing that we are going to do is, according to our rules, okay, I believe you can still remember our trading rules. So say rules for trading. Okay, need to remove this, and then put rules for trading. So number one, we said number one, we said that we need a confirmed trend. So confirmed trend. So confirmed trend. Okay, and then we said two highs,
two lows,
and two lows. So that's a confirmed trend. Number two, we said that recent break of structure. And this is our big. Number three, we said pull back into the discount for a buy or premium for a sell. Exactly. And then number three, number four, identify the properly priced zone, and this could be supply or demand. And then we said number five, we'll be looking for what? Confirmation on that zone, right? So confirmation. Okay, so we said our confirmation is our choke or change of character. Okay, of the zone. Right, so these are the rules that we looked at. I believe there were five, should be, yeah, it should be five that we looked at. And I said there are two more that we're going to add to this just to complete everything, so that whenever now you're looking for a setup, you're looking for your entry, you can now begin to look at those rules for your trading that you are going to just follow. And like I said, these rules must be ingrained in you, right? They must become a part of you. They must become a part of your subconscious mind, because you just have to know them. They must just be in you automatically. You don't have to start memorizing them, like trying to remember them. Okay, what is rule number one? Confirmed trend. What is rule number two? Recent break of structure. What is rule number three? Pull back into the discount or premium zone. But they should just be in you, whereby if you look at the market already, all these rules must come together, right? And give you a confluence for your entry. So now let's say we are already in a confirmed trend, because price is giving us a high, a low, high, higher, low, higher, high. So a low, a high, a higher low, a higher high. So let's say we are already in this confirmed trend. And then now the next thing that we want to see is price pulling back into either the discount or the premium zone of that particular range. And like I said, when you're trading, you're looking at the market, price is going to give you different kind of ranges. Some will be shorter ranges, others will be longer ranges, and you're going to experience different types of pullbacks. Others will be shorter pullbacks, while others will be longer pullbacks. So however type of structure the market gives you, we already have our rules for determining the type of market structure for each time frame. And we said that on a daily time frame, we said that we are looking for 300 points and above. Let's hope you've not forgotten this. So we'll be looking for 300 points and above to measure what structure is. And we said on H4 or 4 hour structure, we'll be looking for 200 points and above. And then we also said that on H1, can go to H1, we'll be looking for 150 points and above. And then can go to M15, we'll be looking for, so M15 will be looking for 50 points to qualify it as market structure at M15. And then M5 said we'll be looking at 25 points and above. So these are your points to determine the type of a pullback. And what that means is that you look at this pullback right here from that high. From that high. Okay, yeah, just a moment. Yeah, so from that high, of course, you measure to this low to look at, okay, is it above? If it is 4 hours, like you can see 4 hours, and you're looking to identify market structure. So you'll be saying, okay, is this above 300 points or 200 points? So if it's above, you can see here, let's say it's 600. So you can say, okay, it qualifies to be structure on 4 hours. And then once you do that, then the next thing that you're going to know to do is you're going to identify your zones. Like I said, the extreme zone is the most highly probably, it is a zone that has a high probability. What? It is the one which is of high probability. Okay, it is the one that is of high probability, meaning that if price pulls back to this area, we don't expect this area to break, because again, when we look at the market structure, we know that we are putting up strong lows and weak highs, and strong lows and weak highs, meaning that price should not break below this low, because the moment price breaks below that low, then what we'll be having is an unconfirmed what? Downtrend. So we're going to have an unconfirmed downtrend once this low goes, and there's a possibility that the market can do this, create that lower high, and continues going to the downside. So this low should not be broken. It should not be taken out. It should be protected. Hence, the demand that is found right here must not fail, right? It has to hold, right? It has to hold. Okay, so that's the whole idea. But, and I also said that here, when the market gets to this zone, you can take it as it is, where you can just put your entry right here, right? Using this long and short position, you can put your entry right there. Okay, let's say you put your entry right here. And then after you put your entry right there, and you can target the previous high for your take profit. Why? Because the market now is in an uptrend. So you're going to target your previous high for your take profit, meaning that you are confident that once price comes to this area, all right, it shouldn't break and go to the downside. Once that happens, then the setup and the structure completely has shifted and it has changed. All right, so we know that, okay, once price comes down here, even if it can go even lower, we know that eventually it has to come out and give us those buys that we are anticipating to happen in the market. However, when we are now looking at these continuation zones like this one here, because this is going to be a zone, also this is going to be a zone, all right? Let's say we have two zones along this impulsive leg or along that range, right? We have two zones. So you have to, what you need to look out for now is to put your discount and premium too. So you put that discount and premium too, and then now you begin to look for your what? You begin to look for your zones that are below 50%. So you begin to look for zones that are found in this area right here. These are the zones that you begin to look for. Okay, so these zones that are found below this green line right here for a buy are the high probability. Not the highest is this one, because this should not be broken. That's the highest, but this one has a probability of holding. But then once price gets to that area, this is where you can look for confirmation. Why do we want to look for confirmation? Because once we start looking at the concept of liquidity, this zone may just be used to create enough inducement and liquidity in the market for those early buyers. All right, so sometimes what the market makers may do is they may try to come and use this zone right here, create inducement for early buyers in order to come and take them out. Then price may even come right here, give you now that change of character, and price may then push to the upside like that. All right, so this is why we're saying that once price gets to this area or this zone, which is a continuation zone, we need to look out for what? We need to look out for those confirmation. And I also made mention that when after you have identified your zone, you wait for lower time frame confirmation, which is a change of character on that particular zone, in order for you to take it as a zone that you're going to take trades off of. And also, it's not always that the market is going to come to this area. Like, it's not always that the market is going to come to this area. Sometimes the market may just use this zone and create the higher low from right there. Then price may even push and go all the way, leading to the break of structure, creating a new structure to the upside, where now we can even have a new structure like that, where we have a break of structure right here, and we have a new higher low and a higher high. And the market continues in its trend like that. So that can happen in the market because anything in the market is possible. This is why they say that trading is the game of probabilities. So you just have to have a higher probability of one thing happening over the other. That's what an edge is all about. It's a higher probability of one thing happening over the other. All right. So now, if price again does this, again, you repeat the same process. You go back to rule number 1. You come to rule number 2, rule number 3, rule number 4, rule number 5. You keep on repeating that until one of the rules fails to work. All right. So if one or two of the rules fails to work or fails to hold, then the market may probably be planning to do something different. And then now that's where now you begin to change your perspective over the market, and you begin to look at what could be what the market could likely do. All right. And then the other thing that also is important as we are looking at supply and demand, and I believe, I'm sure I should have made mention of it last time, but let me recap on it, is where you, if let's say the market has been pushing to the downside, let me just clear almost everything so that I can have clear white space. All right, so let's say the market has been pushing to the downside and creating these lower lows and lower highs, all right? And our expectation is that the market should come and mitigate this area right here. That's our expectation, but it's not always the case that the market will go back and mitigate those areas. So there'll be some zones that will not be mitigated in the market, right? And price will react on different areas of interest. And this is why any strategy in the market works. So sometimes the market can just give you a break and retest, and sometimes the market can give you a deeper pullback and yeah, stuff like that. So once we have this kind of an arrangement right here, okay, one thing that was common is that price kept breaking structure to the downside, and we kept on having these lower lows and lower highs being printed in the market. So you can have a break of structure right there, like that. And also you can have another break of structure right here, and another break of structure right here, and another break of structure right here. And also another break of structure right here, and another break of structure right here. For as long as price keeps on breaking the lows and respecting the highs, we continue to look for selling opportunities. That's the whole idea, and that's the whole purpose of this trading. All right, so now what we'll be identifying, let's say here price came and mitigated this supply zone. So you can say supply zone mitigated. So let me just say mitigated right here, mitigated, right? And again, we have another zone right here. And this zone is not mitigated. So what are we going to do? We'll leave it as an unmitigated zone. So we're going just to say unmitigated, mitigated, meaning that price never put back to that area. What we expected was to see price pull back to this area, grab the orders, then continue its move to the downside. But we can see that maybe if we take our gun box from that high to this low, did we come into the premium? Yes, we came into the premium. Probably price reacted on a zone that was maybe just somewhere right here, all right? Because we never know where price is going to turn from. No one knows, all right? So the goal is just to know, okay, where am I looking for my entries? I'm looking for my entries in the right price zone or right areas, All right, I'm not just looking for my entries on any, as long as it's an entry that I have to look for. No, I'm looking for them on the areas of interest, which is either premium zone for a sell or discount zone for a buy. All right, so now again, we begin to see right here, we had another pullback. Okay, price came right here. Okay, so in this situation, price never even mitigated anything in our premium zone. So let's say if we only had one zone, might even have two zones. All right, so you can also indicate that as unmitigated zone. All right, so you can say also this one was unmitigated, meaning that price never put back to it. All right, because again, the goal of this pullback was to come and grab these orders right here, but then that failed to happen. Price never put back to this move right there. Maybe this was one of those break and retest kind of, trade, and this is not something that we would like to trade, and this is not something that would love to see happen. Okay, I don't take break and retest because it's not in my strategy. So I wait to see price, unless the break and retest is happening in my premium or discount zone. Yes, that maybe I may consider taking it. And of course, there has to be a zone right here, meaning that I have to find a zone right here on this leg from that high to this low. I must find a zone. All right, I'm not going to look at this area right here, but I have to at least find a zone right here where price can come and do what? And react. Okay, so now let's say here, according to retail trade, we have a break and retest. So you can even indicate right here to say this one was just but a break and retest. So you can say break and, or let me say break and, okay, break and, I'm trying to find break and retest. Okay, so break and retest. All right, but we have two zones that have not been mitigated. So unmitigated. Okay, so we have the extreme and also the decision. And again, the same thing happens, right, where we see another break and retest. So again, we pull our gun box right here. And again, we have the same situation right here where we see a break and a retest. All right. But then the fact that this break and retest happens twice, does that mean that we should abandon our strategy and start trading break and retest? No. All right. Consistency is in the mind, not on the charts, meaning that you should hold on to your strategy and keep repeating the same thing. Keep coming, keep showing up, and keep looking for those setups that you know well. All right. Whether they show up or they don't show up, it's none of your business. As long as you showed up, okay, eventually you land yourself a nice setup. So let's say this was another break and retest and price never came back to this zone. So you can see we have many unmitigated zones that you could have maybe, if price had put back to those areas, you could have, nicely taken some nice trades. Okay, so this one was a mitigated one. All right, so we say this one was mitigated. Now, price, you may now be saying, okay, we have a recent break of structure, because again, we don't know when price is going to reverse and become an uptrend. All we know is that for as long as the market keeps on giving us those selling opportunities, we'll keep on buying. So even at this moment, I'll still buy the market. All right, I won't anticipate a reversal because I don't know when that reversal is coming. You get it? So you don't have to start anticipating a reversal, okay? Only react to the market when the market gives you an opportunity, all right? It shows you something. That's when you can say, okay, I can see something happening on the market, therefore let me try to jump in and take advantage of whatsoever is happening in the market, all right? But if you don't see anything, you don't have to start anticipating that, okay, now this is going to be the lowest and price is going to reverse. No one knows when that is going to happen until the market decides to reverse. All right, so let's assume we don't know that price is going to reverse, but now the market makers have already started loading up on their buys, all right? They have started loading up on their buys according to their court reports and etc. and all those things. They have started loading up on their buys. So as they begin to load up on their buys, price then begins to shift, begins to push to the uptrend. Maybe you could catch a lower time frame pullback, you know, catching that lower time frame pullback in order to come and sell it from here. You may even have a reaction, all right? Let's say price is right here and you decided to sell from here, all right? So you say, okay, I'm selling because now I know price must go down because it must fulfill the objective of a downtrend. And the objective of a downtrend is what? To respect the highs and break the lows. That's the objective of a downtrend. So right here now, you are in and you're seeing some good profits because, of course, you don't know whether price is going to go down or it is going to go up. No one knows, all right? So, but all we know is that we've had a downtrend like this. We've had a downtrend, and what price has been doing is just giving us lower highs and lower lows, respecting the highs and breaking the lows, respecting the highs and breaking the lows until we are here. So we get into this trade. So no one knows. I can't tell you to say I know whether this market is going to continue going down or not. I'm just trading the market based on the information that it is giving me. And I don't want to predict because I don't want to hurt my feelings. All right. So that's the best way to trade the market. You just have to be neutral, right? Because the market is neutral. So you just have to approach it with a neutral mindset. Even as you are applying your concept and your strategy on the market, you approach it with your neutral mindset. All right. So price breaks to the upside, then begins to pull back. Then eventually something unexpected happens. Price then respects this internal structure, which you didn't even, consider that price is going to respect. All right. And price then, instead of dropping to the downside, instead of breaking structure and continues going down, price eventually respect that one and then breaks the high. All right. So now after price breaks the high, what are we going to have? At this particular time, we are going to have an unconfirmed what? Uptrend. That's what we looked at when we were looking at market structure. So we have an unconfirmed uptrend. So we have broken structure, but now we only have one low and one high. So we cannot call this an uptrend because, again, there are two things that may likely happen right here. This is where we become open to two possibilities. The first possibility is that price is going to resume its original trend, which is the downtrend, and then we're going to consider this to be our new lower high and this to be our new lower high. So meaning that this is going to be considered invalid, and we're going to have one push from here all the way to the down here, and then we pull back and we push to the downside. That's how the structure is going to appear. Okay. That's the first possibility that we're going to look at. And yeah, that's the first possibility that we look at. Now, the second possibility that we're going to look at is where price pulls back down, creates a lower high, then gives us a higher high, so that now we have two highs and two lows. Okay, are you there?
Yeah.
Oh, okay. So you're following. Any questions?
No, I'm following you now. No
Okay.
question for now.
Everything is clear, right?
Yeah.
Okay. So now, right here, price may react to something on the left. Let's say that was a zone right here, maybe an unmitigated zone somewhere right here, right? And then price comes into this area. We don't know. So, okay, we've taken this one, a loss, but we are still open to what? So this zone is no longer important, but we are still open to what? To both buys and sells, all right? So we may try to say, okay, now that we are open to both longs and sells, maybe we may try to take some entries right here. But now I'm going to be a little bit conservative. I'm going to wait for my confirmation. So let's say now price gives you a minor pullback, then it gives you a change of character like this, then price pulls back, then it gives you the entry. All right, so now let's say now you've taken an entry from this zone, which was unmitigated, Now price hits that unmitigated zone. Okay, so there are two things, like I said. The first one is price could go all the way to the downside and take out that low and resumes its downtrend move. All right, that's one possibility. All right, so price could just go all the way and attack this low and continues in its downtrend, because now it decided to use maybe one of those unmitigated zones. And according to the laws of liquidity, we can even say there was some kind of liquidity here, but we are going to look at liquidity separately. All right, I'm just trying to combine some things so that we may see. So I may even consider this one to be a very, very strong zone, because now it has liquidity above it and it was unmitigated, and price comes to it, gives me a change of character right here as a confirmation for my entry. And then what happens? Price now may start even going to the downside. So the second question that comes in is, the second possibility that comes in is, we have just broken structure. All right, so we have just broken structure. All right, so we are no longer bullish, but we are unconfirmed bullish. It's no longer a bullish trend, but just unconfirmed bullish, meaning that price may be considering to do what? To reverse. All right, so my target shouldn't be very, very, very low. All right, at least I should target the 50% of that range, because now we have a new higher high that has been created in the market. So I'll still consider this to be a bullish range, because it's not a bullish trend, but it's just a bullish range from this low to that high. All right, so I'm going to consider it as a bullish range, and I may put my take profit at the 50%. Why? Because I don't know whether price will continue going to the downside and take out this low, but at least I know price can get to the 50%, even to the discounted areas. And from there, the second possibility now comes in, where now we look at break of structure to the upside again. All right, so now if price now gives us this kind of a move, so now we now have a what? A confirmed trend. We now have a confirmed trend. Now that we have this confirmed trend, the next thing that we're going to look at, and the next thing that we're going to do is we're going to now begin to look at these zones. So these zones, if you left them on the market because price never put back to them, you don't have to worry so much about these zones. Why? Because now what we have is that we have a first low. Oh, what's this now? Okay, so we have a first low, then we have a first high, then we have a second low, then we have a second high. So at this point, we are confirmed bullish. Now that we are confirmed bullish, what we are going now to be looking forward to is demand. So we'll be looking to buying at demand only. All right, but selling at supply, it can be very risky, because we don't know whether this supply is going to hold right here. All right, why? Because once one supply fails, like this supply failed, all right, and price created this high, and then also this supply failed right here, and price created this new high, we say that supplies in a bullish market are weak and demand in a bullish market are strong. So these demands are going to become stronger now, and the supplies are going to become weak. So if we break one supply, which is this one right here, all right, meaning that all these unmitigated supplies are going just to be used as reaction points for pullback facilitation. All right, let me pause here and ask a question. Do you understand? Is there any question?
No, it's okay.
It's okay. All right.
Yeah.
So they're going to become reaction points for pullback facilitation only. All right, only. And what you start looking for now are buying opportunities, meaning that now we have flipped the game, and we'll be looking for price to maybe pull back into these areas, like this demand right here. All right, let's say this demand right here, which is the extreme, which we don't expect to see it broken. We don't expect to see price trade below it. And also maybe this demand right here, which is also very important. And we can see that even here, price had this demand where price pulled back to. All right, so you can see, although this looks to be quite a big range, but you can see price came into this demand zone, picked some orders, then pushed all the way to the upside, broke structure. So now buying in demand would be good. Now, if price gives you a change of character right here, all right, at this supply, where price gives you a change of character like this, you can sell the market from here, all right? Now, selling the market from here, you need to understand that the current trend is bullish. So you are trading against the trend. So the trend is bullish at this particular point, all right? Because now we have confirmed trend, we have 2 highs and 2 lows. So if I'm selling from here, all right, simply because I saw a change of character at that zone, I don't have to swing, all right, and expecting the market to go all the way, taking out all these lows and going all the way to the downside. No. Those are unrealistic expectations. Why? Because already the market has showed us that it is bullish, it is positive, right? It's not negative, it's positive. So if I'm selling this market, all right, simply because I've seen that change of character, it will only be to take the market to where? To take the market to maybe the 50%, all right, or the nearest possible zone. So the nearest possible zone where I may be expecting to buy the market is this one, all right? So this is where now having realistic targets and exits, you know, where you start looking at where should I exit the market from, begins to come in, all right? So now price may pull back. So this move, right, it's going to be a pullback of a uptrend move. So price may even pull back and hit this area, right? And sometimes it may even continue going down. But the fact that price hit your stop, your take profit and continued going down does not necessarily mean that next time that's what it's going to do, because we don't know what the market may do next, all right? So we just have to become so realistic with our expectations and get what the market gives us. So let's say this was what the market gave us, and we never had any confirmation on this zone. So let's say this zone failed to work, and then once price comes to this demand, remember, we are bullish. So these will be your nice trades that now will come in. So here, this is why you'll be looking for those long buy positions, right? And you'll be targeting maybe the highs. Okay, in this situation, you don't have to target anything maybe inside, because the trend is uptrend. So you can even target, you can even take longer targets, you know, bigger targets, because you're trading with a trend, all right? You're trading with a trend. And of course, price again is going to push to the upside. Let's say it gives you those highs and it reacts on this one, maybe it just makes a smaller pullback, comes to this area, maybe also this one, you know, gives you a smaller pullback, and price continues pushing to the upside. All right. So this is how these zones are just going to help the market. All right. They'll just, you know, act as reaction points. All right. And sometimes if you want, you can't even, you know, don't have to, if you just want to trade, you know, you just want to be bullish, you don't have to worry where the pullback is going to start happening from. You know, sometimes it's where we become too expectant of what next the market is going to do that we get disappointed. So if you don't have too much expectations of what the market is going to do, then there's no need for you to become disappointed. Why do you need to be disappointed when you were not expecting anything to happen on the market? You get it. But rather you're just reacting to the market. You get it. So no one knows where the pullback is going to happen, all right? Whether it's going to happen at this unmitigated zone, or it will happen at this mitigated zone, or it will happen at this. It doesn't matter. It doesn't matter. But what you need to know is that once that pullback begins to happen, your goal is now to start looking at where you are in price. So this is our range. Let's say this is our range right here. All right. So until that pullback begins to happen, all right, that's when now we'll start looking to say, oh, okay, now the pullback is happening. Let's begin to see, let's wait and see what the market is going to do next. Any questions?
No, I'm good now. I'm good for this one.
Okay. So this is what I needed to explain to you and just shed more light so that in case you see such kind of behaviors on the market, you don't have to be confused and start asking a question to say, but we didn't look at this. He didn't mention about this. Why am I seeing this? And we didn't cover it in our course. All right. So I want to make sure that all those areas that, may be remaining as, untouched, I touch them so that you may have a clear understanding of the whole concept. And I believe at this point now, you are beginning to see the relationship between the market structure and supply and demand. I believe at this point, you're beginning to see that relationship. And I don't know how far you've got, if you've been putting this work, this knowledge to work, if you've been rehearsing, practicing on the charts, trying to see how this information works. I don't know, but
I started to identify like the pullback when I see the market. Before I didn't pay attention for the pullback. Now I pay attention to it. So
okay,
even if I said that I have the opportunities like to buy or to sell, I wait for the pullback to see what will happen. If it will go reverse, if it will reverse or not. I didn't look at this before.
Okay. All right. Okay. That's perfectly great. That's perfectly great. All right. So I believe also last time we did identify the supply and demand. In our last meeting we had, we did identify the supply and demands, right? Okay. All right, great. Okay, so again, I'm just going to go through again just to finalize on the supply and demand so that I don't have to leave you with any question that may begin to bother you. All right, so the most important thing whenever you begin to look at the supply and demand concepts, like I said, sometimes it's important, it's necessary to look at, look at the left and begin to see where the pullbacks will begin to happen from. But also, again, it's not so much important because all you need is to, stay out of the market until the pullback happens, and then you get into the market. Unless you want to trade back and forth, yeah, that may be necessary. You may need to do that. But for me, I found it not to be so much necessary. All right, I found it to be not so much necessary because if I'm buying in an uptrend, I just have to focus on those buys. Once the trend shifts and becomes a bearish trend, I start focusing on those sales. Once again, the market shifts and becomes a bullish trend, I start shifting on those what? Buys. All right. To avoid, more especially if you are a learner beginning to learn and understand this concept, it's easier that way. All right. To avoid confusion, to avoid yourself getting confused with what the market is actually doing. Okay. So let's say this is an uptrend market. We on 4 hours, what we can see right here is that we have been bearish, right? So we're going to begin from here. We broke structure right here on 4 hours. And then after we broke structure, we can even take our gun box from that high all the way to this low right here. Okay, and we can see that price came into this area, right? And after price came into this area, we saw there was a reaction and price decided to create a lower high right there and went down and created a lower low. So now if we are to identify our zone, we only have maybe this one zone right here, all right, which is a supply. So I'll just make it red so that you can know that this one is supply. So it's going to be red like that. So this is our supply zone. This one is much better. So this is our supply zone, which price never mitigated. But again, we can see that there was something within this area, and price came and mitigated, this kind of a situation here. But again, this kind of a situation, it's quite subjective, right? Where price created a zone, all right? Like it's something like this, all right? Price pushes to the upside and then creates that zone and then comes and takes it out in one move, all right? So this is what we call a breaker block. Now, why do we call it a breaker block? Because price, it was initially a demand zone, right? It was initially a demand zone, and I'll explain further on breaker blocks and mitigation blocks after we are done with everything. That's just more of an added or a bonus class or a bonus lesson, all right? So that in case you see such kind of a reaction happen, you don't have to get confused and start asking, but why did it happen? So normally, we expected to see the market do what? We expected to see the market react off of this area, all right? Because this was a demand, because price was breaking highs, all right? So high, 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 low, high, 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 low, high, high. This is demand, all right? So price was supposed to respect this and go up. So it was supposed to do this, all right? Come, pull back into this area and then push to the upside, leading to the break of structure. But then price comes impulsively with one big candle and smashes that area. It smashes this demand, all right? So this is what we call a swap zone or a break and retest. It has got different names, all right? But it's also called a breaker. They call it a breaker because price broke this demand, all right? So this zone right here, which was not mitigated and respected, but price just pierced through it impulsively with a big candle, becomes a breaker. All right, so this is why you can see price pushed, made a pullback right here, then pushed and broke structure to the upside, and then price just came and broke through it with one impulsive candle like this one, right? So you can then as well consider that as a zone, right? But now it should be properly priced. It shouldn't just be any zone anywhere. If you see, the reason why I considered it is because it's found where? It's found in our premium zone, right? So if it was somewhere below here, I wouldn't have even considered it. It would have been irrelevant. It would have been useless to us, right? So any question on this one?
No.
It's clear?
Yes, almost clear, but I think I will understand better when you finish. I'm following you now.
Okay. All right. So price then comes here, all right, and uses up that. And remember, like I said, price, we don't know how deep the pullback is going to go and where the pullback is going to happen from, all right? We don't really know. So our duty, our job is to react to what price gives us. So if price gives us this to be the zone where they're going to create their lower high, so be it. So our next goal is to mark the break of structure and repeat the process. So again, I take my gun box. You've seen, it's something that is just automatic. So break structure, gun box, then identifying what? The zone. All right, so in this situation, again, identify that zone and price comes there. Again, you can see we don't have anything significant right here, right? We had a high, a higher low, then a higher high. Of course, this would have been a nice zone, but of course, it's quite too big of a zone, all right? It's not even properly priced. It's quite too big of a zone, and it's not even properly priced. So you can see price came into it, then tried to push the downside, failed, then broke through it, and what happened? Price started going to the upside. Right, so it's quite a nice zone, but it's quite too big and it's not properly priced, because what we need is to have a zone that is properly priced. All right, so maybe we can consider a gap or anything in these areas, but for now, let's just completely ignore it because nothing is clear as of yet, and we only want to trade zones and areas of interest which are quite clean. Right, because what we want is not confusion. but what we want is something that is clear, something that we can easily interpret and understand rather than guessing what is going on. All right, so now we failed to take out this low because the objective was to take out this low, but we can see price fails to do that. It fails to meet up its objective. It fails to finish up its objective, right? Price fails to finish up its objective. It fails to take out this low. All right, now that price has failed to take out that low, what happens? We can see price then pushes to the upside. Okay, so at this point, we take out this high. Okay, we take out this high and we break structure. We break structure to the upside. And then after we break structure to the upside, price then comes to this unmitigated zone, right? So here, this is where we begin to see what? A reaction, right? Why is price reacting here? Because the zone was not, the orders were, there were orders. So we expected price to come here before we push to the downside, but price failed to reach that area because it found other orders right here and tried to use this area to grab those orders to the downside. And also for the fact that it was creating some form of liquidity, which the market came and took out. All right, so we would have expected this to be a very high probability zone, but also at the same time, the market has already shifted its trend. So in as much as we may look at this to be liquidity, all right, resting above these areas, right, liquidity resting above these areas, we also don't have to forget the fact that we are no longer downtrend, but we are unconfirmed bullish. All right, so this was a low that led to the creation of that high, and price now is reacting off of this area. So at this point, we are open to both buys and sells. You get it? We're open to both buys.
You said that unconfirmed or confirmed?
Unconfirmed bullish. I said unconfirmed bullish. We are unconfirmed bullish because we only have one low and one high. Understood?
Yeah. All
right. So we are unconfirmed bullish, and at this point, we only have one high, which is this one, and one low, which is this one. So at this point, then we are going to be open to both what? Buys and sells. All right, meaning that this buy could, go all the, this sell could go all the way and take out this low, which is possible. Why? Because the trend is not yet confirmed. At the same time, it could, this supply, which was not mitigated, could now, facilitate a pullback to come into lower areas in order for a buy to be initiated. All right, so those are the two possibilities that we have. And this is where now we take our gun box again and we put it right here all the way to that high. Okay, so now that we have put our gun box right here, all right, we want to see price do what? Pull back into the demand. All right, so now here we're going to identify the zone. All right, so we're going to take this last candle right here, the last sell, because this is the last sell before we bought and went all the way to the upside. So this one is going to be our demand zone. So for a demand, we can even pick blue right there. And we don't have anything right here that we could obviously, use as another zone that price can come back to. So the only zone that we have is this one right here. And we can see price obviously went without coming back to this zone. And what else? Now that we have broken structure again, so this was a pullback, then we break structure. So we're going to consider this as a break of structure. All right. So now we'll keep on looking to the left, because when we look to the left, we still have so many zones that we are not mitigated. So we still have this zone right here. It was not mitigated, right? We still have other types of zone. Let's say we had a push, a pullback right here, although it's not too nice of a zone, but yeah, we can consider that one, because on the lower time frame, you can see this was a push, then we had a pullback. It's something like this. All right, it is something like this, where price pushed to the downside, and then we had a sharp pullback, right, and price then pushed to the downside. Then again we had a pullback right here, and all these internal structure kind of an arrangement right there. Now we are having this zone right here, all right, but we don't expect price to come and do what? We don't expect price to come and use these zones for major reversals. No, at the best, what these zones are going just to be used for will be pullbacks. Okay, so my expectation is not that the pullback will come out of this zone. All right, because back then, what really used to affect my trading was I was too over expectant that whenever I see something like this, a zone, I would start loading my sales. And sometimes price would just give a minor reaction, then push to the upside. And then I'll become so angry at myself. You understand? I'll become so aggressive, so angry at myself, asking myself questions why it didn't hold and all those, stupid questions that I used to ask. But the truth of the matter was I was just trading against the trend of the market, right? Until it dawned on me to say, I don't have to care what price did in the past, right? What I have to care so much is what price is currently doing. So my current price action is more important than previous price action. Because again, I don't know how many orders have been left here, whether they have been closed or they're still existing. I also don't know whether they managed to close these orders or they're still open. I don't know, all right? So, but what I'm sure of is what price is doing, because these lows, price will make sure that it respects these lows and make sure that it protects these lows as it keeps on breaking structure to the upside. Are we together?
Mm-hmm.
All right. So now we have broken structure to the upside. We have created that high right there, and we had a pullback in one candlestick. And sometimes, like I said, pullbacks may not really necessarily be those kind of pullbacks that you may like. All right. So right here, we had that pullback to the downside. And again, you can see that in this area right here, we had a push to the downside, then price tried to go up, then it came with this wick and grabbed some of the liquidity and all those things. So again, we can just identify this as a zone right here. And again, demand and supply is going to even become more clearer once we incorporate some liquidity concepts, all right? But for now, we can just map it like that, including that, black candle, this black candle right here, because this was the last sell before we had this week that went down. All right, so this whole becomes our range, and we have this demand zone that price never came back to. Also, within the same discounted zone, we had another demand zone, which is this one. So you can see that this one price chose to mitigate this one, right? It was also properly priced. It was valid. This is where now on the lower time frame, you look for lower time frame entries. But I can't go back to 1 second, 5 seconds, because I'm just using a free version of TradingView. So it's not going to allow me to do that. All right. But as we get to current price action, I'll show you now how you can use lower time frame for confirmations. All right, so we have an entry right here, then price pushes all the way to go and create that high. All right, so now we have a low, a high, then a higher low, then a higher high. All right, so now we have broken structure right here, and after breaking structure, our next range will be from here. So you can see these are zones that were never mitigated. And we can, if you want, you can keep looking left, like even here on this week right here, we can say there must be some zones right here, because there's so much that happens even in weeks. So you can even say there's this unmitigated zone, right here that price never put back to, because again, we needed this zone to be mitigated, because you can see price, after price breaking structure, we needed price to come and grab orders right there, either on this one, on that one, on that one, but that never happened. So again, we're going to leave these zones as unmitigated zones, and we don't know, maybe they may be used in the future for pullbacks, who knows? All right, so from here, price pushes all the way to create the higher high, then it meets this zone. So again, here, it's not now an opportunity for us to start loading in more selling opportunities, because that's the mistake that I used to make. So I'll load a lot of sales and target, maybe, you know, have extreme targets, you know, but then price will give me some few profits, then goes up and hits my take profit. Why? Because I'm moving against the current trend. The current trend is an uptrend. So what I should be looking for is look for buy opportunities in that sense. All right. So again, we have this high right here. And what happens? We have zone, let's say we have a zone down here, which is a demand zone. And this time around, that demand zone fails to work, because like I said, these zones in the middle of the range, a zone in the middle of the range may fail to hold, but the extreme zone will always be respected, because if the extreme zone fails, then what we then going to have is a reversal. All right, so let's say now we mitigate this one, so this one is mitigated, and price then continues to break structure to the upside. So again, you can see we then break structure again to the upside, and we pick another range. So it's just that, right? That's what you keep on doing over and over and over and over until you are what? Until you master. Yeah, until it becomes second nature to you, where you say, okay, so I don't have to be confused as to where the market is going or what the market is going to do next. I just have to know that, okay, my expectation is bullish, and I'm just going to be looking for buying opportunities once those pullbacks come around. Okay, so here you can see price never put back into anything right here. But again, like I said, if we were to go on lower time frames, let's say 1 hour time frame, 1 minute, I mean not 1 minute, 1 hour time frame, you can see we had a high, a lower high, then a higher high, then a lower high right here, then a higher high, then we broke structure to the downside impulsively. And again, here, this is where, again, you look at the impulsive move of this candle. Look at how big this candle was that went all the way to the downside. Okay, so if we want to identify a candle that we can use, or we can say we can identify this candle and pull it to the right. And of course, you would see how price came and nicely respected this. But then I wouldn't have known that price was going to respect this. All right, I wouldn't have known. But then this is, again, like I said, this is why you look for confirmations on the lower time frame. All right, because I wouldn't have known whether price is going to respect this one. And sometimes price can even come and respect these imbalances. And again, topic of liquidity, we'll look at imbalance. Again, price can come and respect an imbalance like this candle right here. Maybe the middle of it, it can come to the midpoint of this imbalance, like, you know, somewhere here, can come and respect this imbalance, and price goes. So where the lower high is going to be, the higher low is going to be formed, no one knows. But we only know that this one should not be broken. This is where on this one, we need to look for lower time frame confirmations to confirm that now this is holding, right? This is holding, right? Back then, I would have told you to say would be looking for Wyckoff, right? I'm sure you've heard of Wyckoff. I don't know if you've heard of Wyckoff before, the Wyckoff methodology. But we'll be looking for lower time frame confirmation. We'll be looking for a change of character for our entries. That's all. So let's say that in this situation, price decided to respect this mini structure. We had a low, high, higher low, can say a higher high right there, but then higher low, then we had that, then we broke structure. Yeah, in this sense. So This was the last sell before they bought impulsively. So once they broke it, they never respected it, broke it with one big candle. You can see right here, we expected this also, because this is where again it becomes tricky, because we expected this to come and do this, right? But again, you can see the reason why again it becomes valid. This big candle never reacted to this zone here. It never did react, right? So this candle never reacted to it. So it just took it out, created liquidity above it, then went. Then price came back into it, grabbed this liquidity above it into this area. Then we see a push to the upside. Again, this one is, I picked it because it is below our green line. So it is properly priced. Any questions?
No.
Following, right?
You said that do not react to this candle.
Huh?
So you said that you do not react to it or on it or on any trade. If I have, go ahead.
What is your question?
So my question is, when I look at a chart like this, on any other chart, if I have it like this, I don't need to react on it, or it's just an example like this you take for this one.
If you have it like this, right? If you have it like this, you have to make sure you pay attention to it, more especially if it is below. Like, this is why I was saying that I was giving you all the reasons why you should look at it. The first reason is it was a part of internal structure, all right? It was part of internal structure. This was the low, then we had that high, all right? Or we can say we had that high, then we had this low, then we had finally that high. You get it? Then price should have come and reacted to it and given us another new high. That was the idea. But then price never did that. Price broke through it impulsively. You can see how big this candle was. It never reacted. It never produced a wick. It never reacted. What do I mean by reaction? All right. What I mean by reaction is where a candle meets a zone. Let's say in this sense, although this is not a good example, it creates a wick where price reacts to a zone by creating a wick. So all these wicks here, these are examples of reaction. All right. This every week is important in the market. So this is reaction. So price is reacting. You can see right here. This is all reaction. All right. Price is reacting to something. So whenever you see a wick, it means that price reacted to something. You get it? So here we just had a huge drop. Price never reacted to this zone here. This is our zone, but we just saw a huge drop. Price never reacted. So our expectation is that if this happens, then this becomes our zone, all right, which I said a breaker, a break and retest. You can call it different names. A breaker, mitigation zone, you can call it different names, but it's just one and the same. So what we now expect is price should come, react, like react, then pushes to the upside. But then if we look at this wick right here, this wick right here is not reacting to this zone. You can see, all right? Price, quite all right, produced a wick as a form of reaction, but not to this zone. It was happening below that zone, all right? And you can see after that, this candle opened and pushed all the way and closed above. All right, it never reacted to this zone again. All right, it never reacted to this zone. So what would have happened if this zone happened like this? If it happened like this, where the market opens, let's hope this is quite clear. Let me just make it a little bit bold. If the market opens like that, the candlestick opens, then the next thing is you see, come on. Then the next thing you see is, what's this now? Okay, anyway, can do it like that. Okay, so the next thing you see is that you see a wick hits this zone and then candlestick closes like this. So this is what I call a reaction, all right? Why? Because this means that price has grabbed some liquidity there. Are you getting that? It grabbed some orders. So this is a reaction. So if price reacts like this to this zone, I'm not going to consider it for my break for price to come back to it. Why? Because most of the orders by just price hitting that and reversing, it means it reacted to the orders which were there, but they may not just be enough. So let's say if the candle then continued pushing to the upside, all right, and also there was another week that was let's say created to the downside like this, so then this becomes my new zone. All right, I'm going to pick this as my new zone now. All right, I'm going to pick this as my new zone. And why am I going to pick that as my new zone? Because that's the one that was left, right? That's the one that was now left, meaning that this one is no longer going to be valid. Why? Because price has already reacted and it has already grabbed orders. You can see sellers came in by way of these weeks, then buyers took over and pushed. So the last buyers to push the market and take out that zones are found right here. So meaning that now I'm not going to pay attention to this zone. I'm going to pay attention to this zone now, which reacted to that zone, because it's all about demand and supply imbalance. So whatsoever wins, it's a battle of supply and demand. So whosoever wins, whether supply or demand, is what we follow. All right. So we follow the strongest here. So this proved to be strong. Why? Because it grabbed the orders first and then took out that zone, meaning that now what is left is the demand, meaning that if price then pulls back, this then becomes my new zone. Do you understand?
Mm-hmm.
Hello?
Yes, I'm here. Can you hear me?
Yes, sir. Are you there?
Okay. Yes, I respond to you.
You understand? You get it?
Yes, I get it.
Oh, okay. Oh, okay.
Yeah.
I didn't hear you. I didn't hear you.
Yes, I do. I responded.
All right. Okay. So let's now continue. Let's do this. Okay. So there now price goes, and then what happens? We can see now to the left. All right. So these were zones that we had left, and price comes here. Quite all right. On the lower time frame, we may take those selling opportunities, but even as we are selling those markets, we must ensure that we can only take profit when price hits our 50% level. So let's say we took a sell from there. All right, maybe lower time frame entries, we had a very nice confirmation and we took that sell right there. So we can only target the 50%, at least the 50%, because we don't know whether price will continue going to the downside. So at least, because this is us now having a reasonable target, or we can target the next zone, the next available zone within the discount zone as our target. Now, this is only after a lower time confirmation on this unmitigated zone, but we don't have to take a trade from this area, where we aim to target to these lows, because price is bullish. And what is going to happen is that the market is quickly going to reverse and take you out of your trades or take you out of your position. Again, continue looking for those buying opportunities. Again, we break structure to the upside. Then the next thing that we look out for is we look out for those zones that can be found on the discount, because we're just interested on zones that can be found on the discount. So sometimes if you have a very huge zone like this, you can refine it on the lower time frame. So let's say in this instance, we have this huge zone, and the next one that we're going to look for is, you can see we had this kind of a reaction right here. All right, and although it's not that kind of a good zone or good reaction, but then what happens? Why am I choosing this zone? Why am I choosing this? Because as we can see, we can even look at this one right here, right? This one right here. This is also a good example of a zone. Now, why is this important? Again, like I said, wicks are reactions, and there are zones on the lower time frame. We can see price pulled back, then dropped to the downside. All right, so price then came and reacted off this. Let's say we can just even pick this week as a zone, or we can pick this whole range right here as a zone. So price came, reacted off of that range. Okay, you can see, reacted off of that range. So this week is a reaction, the above week is a reaction, then price put back, demand came in, then they took out that zone. All right, so that can also be a zone, right? So that's what I mean by that. Okay, so even here we had a week, price pushed, then put back, then inside that week we had this range, which is here. So this could even be more of an inside bar kind of a pattern, but we had a push, then price rejected, then inside that rejection they had to put this candlestick. This is why, you know, price came, and not this is why, but we can see price coming back to this area and react. Because if I use the word this is why, it's like I'm becoming setting to say that's the only reason why they did that, but it may not be the only reason. But for unknown reasons, they decided to come and use these zones. And again, for us, we don't have to predict which zone is going to hold. The only thing that we need to look out for on lower time frame is change of character. All right, that's all. So once we have those confirmations on lower time frame, then we are good to go. That's what we are interested in. We're not interested in pinpointing which zone price is going to reverse from. And also have, need to be winding up now, also have this area. We have a break of structure again there. And we can also see that here, again, price, this pullback was coming from this area right here. So price reacted in that area, then we put back. Again, what happens? Price breaks to the upside. So again, if we look to the left, right, you'll find that price was reacting to something on the left, right? We can even go on daily in order to find what that something is. Yeah, already we have seen it. So price was obviously reacting to something on the left. Okay, so you can see right here we had this unmitigated supply zone right here, right? So we had that unmitigated supply zone, and this is where price came and reacted off of. All right, price came and reacted off of this supply. And then after price reacted off of that supply, what happened? We began to see a pullback on the H4. All right, so H4 now began to do what? Began to pull back. Okay. So we begin to see H4 now begin to do what? To pull back. So we have this zone that was not mitigated, and we also have within this range. So after price hits this supply zone, then we see a massive drop. Price pulls back, then it gives us a confirmed pullback, internal structure. So this is a complex pullback. We've dealt with the matters of complex pullback. So price then begins to do what? Begins to pull back to the downside. So again, we see price break structure, pulls back. We look for entries. It's the same thing over and over. So now, right here, we need to look for this range from here all the way to there. All right, this is where we need to look for our buying opportunities. And we can see that right in this range, we are going to have this demand right here from that low, from that high to that low. So we are going to have this demand zone. And of course, we had a reaction which failed to hold. Okay, so we had that reaction which failed to hold. And also we had this extreme zone, which I said this should not be broken, because the moment they break this one, it means the market is now going in another direction. Okay, so we continue selling. Like I said, we keep on selling until price hits the discount zone. All right, so price, then we sold, then we hit maybe our take profit. If we are selling from this internal structure right here, again, it's the same thing from that high to this low. It's the same thing that you do. So now if you're selling from this zone right here, you're selling from that zone, meaning your target profit should be this low right here. So if you sell from there, the target profit should be this low, because again, we don't know, we are already in our discount here, right? So for me, I would even be looking for some buying opportunities. All right, why? Again, this is another example that I gave you where we can see this was a perfect break and retest. So where price comes to this area, right, looks like a perfect break and retest. So price comes to that area and uses up that area for a push. So you can see, for me, I would already be looking for some buying opportunities, except that I would be expecting that high to go. But then if I begin to see internal structure beginning to form, then I'll have limited expectations. You get it? I'll have limited expectation, meaning that even when I'm buying right here, based on lower time frame confirmation, let's say I'm getting into a trade right here based on lower time frame confirmation, looking at what structure is presenting, I wouldn't go above this high, because at the same time, even though I'm taking this trade to the upside, I'm also taking a trade against this trend, which is pushing to the downside. I know the higher time frame is more powerful than the lower time frame, but I have to be realistic, because I don't know whether this internal structure will still influence and affect price movement. All right, so this is how you need to start thinking in those areas in terms of possibilities and probabilities. All right, so now what happens here is that price now begins to create internal liquidity, and price again comes to this zone. This zone fails to give us a new higher high, but then what happens? It fails, then price comes to this last zone, and it's from this last zone, that's where we get a nice what? That's where we get a nice that's why we get a nice break of structure. I mean, that's why we not necessarily a nice break of structure, but it is here. That's why we had a nice push to the upside. Now, this push to the upside was not complete. Again, you can see price. My expectation would have been to take that high, but you can see price failed to push up, then came and took it out right here, then mitigated this our zone. That was not mitigated. And like I said, this is just unconfirmed bearish, because we only have one high and one low. All right, so it was unconfirmed, and we were open to two possibilities. The first possibility is that the sell will continue while we create lower high and lower low. The second possibility is that the uptrend will continue like that. So you can see that even right here, knowing about supply and demand, you'd still be looking for some buying opportunities right here. All right, you still be open to buying opportunities, because, you know, after all, price has just taken out one low. All right, so having one low failing is not such a very bad idea, because we are unconfirmed bearish, but price can either push to the upside or push to the downside, meaning that it can continue its uptrend or it can just maintain the downtrend. All right, and what will happen now? We are going to have all these internal supply zones that were not mitigated. We're going to have this one right here. And what would this be? Except, you know, pullbacks, of course, because that's what they are going to be used. So once one high or one low fails, we then begin to build a narrative that the other lows and highs are going to just be used, as pullbacks. So we had this high. Now this is just internal structure, all right, that failed, because if we look at what was going on, we were having these internal breaks. All right, that was the internal break, and right here, that was the internal break, and also right here, that was the internal break, until right there. So here we became bullish, but then the bullish failed to hold because price could not continue giving us new highs again. We became bearish, until again price broke even the higher time frame structure, became unconfirmed bearish from that high to this low, and also we were bearish again. But then what happens? Price then recovers and pushes to the upside, creates that new higher high. So the internal structure is now bullish, but then we confront the unmitigated what? Supply zone. What are we going to expect from that unmitigated supply zone? Nothing more than just a pullback. So again, price will go to the extreme of the extreme, which is this supply zone right here, which price never, of course, put back to. Now you can see right here, they even ran it, all right, grab the liquidity above, but it was not a confirmed breakout structure because we want to see the close of a candle. So right here, I just picked the wick because if I went to the zone, we have a very, very, very big candle, which is going to complicate or make things look so messed up. So I just went for the tip, the zone, and you can see right here, price wicked through it, then put back. And at the same time, it is still respecting what? Internal structure, which is this one. And internal structure, of course, we start building the narrative and we start looking at those zones. Like down here, we have a zone in this week that was not mitigated and price just went like that. Okay, I believe it's making sense and it's beginning to shed light on those, because it's more like a repeat of what we looked at. Was it on Wednesday? I don't know if it was Wednesday.
I think Wednesday, yeah.
Yeah, so it's more like a repeat with just some few added information, because I wanted us to at least, I wanted you to understand this, because normally what I do is, once we do this, I would give my client or my student at least a month of practicing this. All right, so I would be off for a month with him until he practices this and shows me results. Okay, because what matters most is not just getting the knowledge, it's also applying what you're learning on the real charts. That's what matters. Okay, so you can see that in this discount, we have this zone and we have this zone right here, and price never came back to those zones. So what happens? We never had a complete mitigation. So we're going to say these zones are going to be left unmitigated, just like these zones on the left, which were reasons for these pullbacks were left, is the same way these zones are going to be used should price decides to start coming down. So it's the same thing that happens over and over and over in the market, and it repeats itself. So again, here we have a break of structure. And after we have a break of structure, the next thing that you need to do is, again, you pick your gun box just like that, and you wait for price to come into your discount or your yeah. So discount zone right here, we have that zone. And then we can also have this zone right here. All right, and we can see how price came back to this zone. Like I said, we don't know which one is going to hold, but all we know is that once price gets to that zone, we start looking for lower time frame what? Confirmation. So you can even see that right here, we even had this smaller zone, right? This black candle here. It's also a zone. Okay, and you can just put it right there, and you'd see how price came, reacted off of it, pushed, then came back to it again, pushed, tried to push up, but there wasn't enough strength. Instead, what they were creating is liquidity. Then they came into this zone, which was just adjacent to it, close to it. Then from there again, this is where now those big buys came from. And what happens? Price then pushed all the way to the upside and led to the break of structure. And again, the process continues. So again, we take our gun box like this, and we wait for price again to do what? To pull back. And it will keep on doing the same things over and over again. It's the same thing. It's the same thing. So here Again, we pick these 2 weeks as a zone. Again, I want to also state that we don't know, right? So it's not the matter of knowing, it's a matter of confirmation that confirms the zone. So I've been asked by many traders and students who say, how do you know which zone to pick? You seem to know where the market is going to reverse from. The true answer is, I don't know. No one knows. All right. And that shouldn't bother you. Okay.
But we will not know.
All right. Let's see this one. I think my internet is becoming a little bit unstable.
Oh,
hello, you're still there?
I'm here.
All right, so let me check. I think my internet is becoming a little bit unstable. Yeah, but we continue. So yeah, that's what price does all the time. So again, here we're going to still look for the same things. So from here, we're going to do what? The next thing that we're going to do is we're going to get our gun box from that high, from that low to that high, and we'll wait. So you can see again, price here, this pullback is not a genuine pullback because price failed to close above the high. It was just a grab of liquidity, then price pulled back. So this was the high, so price pulled back, meaning that if we were to identify our zones, we are going to have this huge zone right here, right? And yeah, of course, you can pick this one, just maybe the week. It's the one that is in our discount. And these will be our zones. And price, of course, pulled back. So meaning that in this situation, there was no trade, right? And again, this pullback, let me see if it was a genuine pullback. It was 1-200 and above. So it's not even a genuine pullback. So 4 hours pushed all the way from down here all the way to up there. So this is our 4 hours. So our 4 hours will be here, be something like this. All right. So even this one, so this candle is going to be a complete demand zone. This will be a complete demand zone right here. And even this week right here could be a zone. All right. Yeah. And we can see price pull back, but it was in our premium, meaning that in this case, it never mitigated any of the zones. And what happened? The market again broke structure. So in this case, these are the zones that you'll be looking for pullbacks, meaning that should price come back to these zones, all we can expect is a pullback. And again, I don't want you to expect that the pullback will automatically happen. Sometimes it may not happen. The zone can just be broken without any reaction. So it's not something that you should now begin to say, oh, okay, I was expecting this to happen. No, it's where you wait and see what the market is going to do. That's all. So
but sometimes it may continue to go up or down without making the pullback, right?
Yeah, sometimes it may continue to go up and down without making the pullback.
Okay.
Yeah. Okay, so again, these are the zones that price never came back to. You can see it put back, but never came back to this zone. So in this case, would say no trade. We leave it like that. Then again, it's the same thing.
No trade.
Yeah. So again, we break structure, and this time around, price comes back to this extreme zone. That was the only zone that was valid. If we put our gun box from this low to that high, it was the only zone. There wasn't any other zone in our discount apart from this. So that was the only zone that was valid. And again, we break structure here. And then after we break structure, what happens is we put our gun box again from this low. So this is where currently price is. We have not yet moved out of this range. So price came, you can see we have zones right here. And for me, I'm still expecting that price might pull back because we've got some serious fundamental news this week, starting with we've got CPI, and we also have retail sales, PPI. We've got some serious news. So we'll see how the market will react to this news. Probably they may even mitigate this whole entire range. So so far we mitigated the discount, but we never touched any of these areas. So you can see price came here, and what happened here? There was just, I'd say maybe price reacted to this week. Yep, you can say price came and reacted off of this week. But again, we might even see price coming lower, right? We might even see price coming lower. So price came and reacted off of this area. And let's now go to M15. Let me take this out. And let's look at the M15 of that area. So now this is where I was telling you to say, once price comes to this area, you can see that, okay, this zone is a zone that we had from our 4 hours, right? This one. I hope you remember it. So it's a zone that we had from our 4 hours, which is right here. So you can even see that, okay, on M15, it's actually a zone, though on 4 hours, it looks to be a week. All right, but on M15, it's actually a zone. And no one would have known that, okay, price, there are orders here. No one would have known, no one would have anticipated, not even myself. But I was able to take a buy on this one. I was able to capitalize on this one. It was a nice buy that yielded some insane profits. Why? Because after price hit this zone, there was a shift in structure. So M15 became bullish. You can see, this is what I mean, change of character. All right, so M15 gave us a change of character right there. All right, after price hitting that zone. So for me, I knew that, okay, so since now M15 was bearish, and at this, after hitting this area, we have become bullish. All right, so this is another opportunity for me. So what I did then is to look for entries within this range. So we had a low, a low, high, lower low, then we had a higher high. After we had the higher high, then I had to look for this range right here. And this is where price came to. And of course, we had to take that trade. So I was buying right there, and profit, of course, was quite high. So it was some nice, good trade. This one really paid out. Yeah, somewhere right there. Okay, so it was one of those nice trades. Okay. Yeah, so, and that's what you look for. So once price hits a higher time frame zone, then you go for a lower time frame and you start looking for what? For changes of character and lower time frame entries. All right. So okay, I think if time permits, we may start our liquidity concepts, let's say Friday, right? But for today, for tonight, for me, it's night here. It's about now, going to 3 p.m.
Wow.
Yeah. Yeah. It's very late. So
yeah, it's late. Yeah.
Exactly. So I just wanted to have a session with you despite my not feeling well, because I just wanted to keep up. I don't want to be so much left behind, because again, tomorrow there's another client that I'll be working with. So
Okay.
I just never wanted to have so much work piled up because I'm not feeling too well.
Yeah, I
All right, so
understand. I understand. So you make your effort if needed.
yeah. Okay, so I think this is where we can end for today, and
Okay.
we will continue on Wednesday.
We'll stay okay.
All right, so
I will plan accordingly.
huh?
I said that I will plan accordingly.
All right. So please go through what we have looked at and keep practicing. And wherever you have questions, I also want to get feedback from you to see how you're doing, where you're understanding, where you're having problems, so that I know that, okay, what I'm teaching, somebody is understanding. Because if I keep on loading information and information, I want to know whether what I'm giving you is something that is applicable on the charts, or it only makes sense when I'm with you, talking to you and showing you, but when you are on your own, you can't even know where to apply it from. So I want to see if it works for you. So feedback from you is also important to know how far we are getting, because I may just finish my teaching because we're just remaining with one aspect, one segment, one part, which is liquidity. Once we are done with liquidity, then the whole course would be complete. So I don't want, again, to finish everything teaching you, and then at the end of the day, nothing has been, you're still having difficulties to apply, and that's not what I really want.
Okay. Like when I'm trying to practice, the only thing I want you to help me with to make me understand very well, it's the risk rewards.
Okay.
If you, I think that at the end you will work on it, right?
Yeah, risk to reward is just the last part of it.
Yeah. That's why I don't ask any question on it.
Okay.
Yeah.
All right. We'll look into it.
Okay. So thank you then.
All right. Thank you. Have a blessed day.
Okay, you too. Have a good night then.
Okay. Bye.
Thank you. Bye-bye.